Are you thinking of investing in property, but you're not too sure what the government's going to do in the years to come? Or maybe you're a landlord and you're trying to put a plan in place to account for future government legislation. Are the Conservatives going to look after landlords? Are Labour going to abuse them? Now don't worry, stay tuned to the very end of this video because I'll be sharing with you how you can beat the government and invest in property with potentially very, very high returns. Now, in this video, I try my best not to share my political opinion. For those of you that know me, know I don't really like to talk about politics or religion. I much prefer to talk about flying. And very briefly on that matter, we've just had some great news that the engine has been shipped. So fingers crossed our engineers can fit the new engine and we'll be back in the skies within the coming weeks. For those of you that don't know me, my name is Marco. I'm a portfolio landlord, property investor, developer and mentor. And I'm incredibly passionate about helping those invest in property and particularly residential property. So let's just give you a brief outline of this video so you can know what to expect. First of all, we're going to discuss where are we now. Second of all, I'm going to be telling you what governments want. In the third part, we'll be discussing what the future could look like. And more importantly, the last part of this video will be about action. What can you do now? So first of all, let's discuss the current climate. Where are we now? What's going on? What's happening? Well, at the time of recording this video, I'm recording this video in November 2023, I would be surprised if we're not already in a recession. Now here's the thing, we both know that we won't find out if we are in a recession till 6 months down the line because a recession is defined as 2 consecutive quarters of negative growth. So think about that. We could potentially be in a recession now, but we won't know because we don't have the figures yet. So the current environment right now isn't the best. And let's face it, are the Conservatives going to be in power when the next general election comes? Well, based on their current performance and where the economy is, I personally think that's highly unlikely. And this is because of several reasons. Number one, inflation is high. Yes, inflation is coming down, but still inflation is very, very high. And I can guarantee you right now, it is higher than being reported. Now, for any of you that have studied economics, I studied economics at university, and you'll know that the government can choose essentially what inflation is. They will dictate a basket of goods, look at the increase in price, and therefore put a general inflation figure on that. So they can choose the variables that go into this basket. Are they choosing a representative, sample of your average Joe in the UK? I don't think so. They're probably choosing the goods that have probably gone up in the least value to make inflation seem lower than it actually is. And there's a really good book to actually read, which is How to Own the World. I was recommended to read this book by Paul Lamphere, incredible person and a seasoned property investor. And this will really describe to you what's happening and what inflation is and how you can beat inflation. Number two, interest rates. Gosh, the last 18 months have been spectacular. After the September 2022 fiasco, interest rates have just skyrocketed. But here's the thing, yes, interest rates are relatively high. In other words, if we look at the past 15 years, we could say interest rates are high. But if we look at the past 50 years, are interest rates high? No, they are not. In fact, they're more or less average when you look at the UK 50-year average. But people don't think like that. We are very relative in the sense that we only assess things based on recent performance. So if last year rates were lower and today rates are higher, well, all of a sudden that's a negative way to see things, isn't it? That's how we as humans see things. So again, we and the general public in the UK, we're not too happy. Interest rates have gone up. Now, are we at the peak? I don't know. There could be maybe a potential rise to go, maybe another one, but I'd like to think we're somewhere near the top. So all this means that people are unhappy. People are poorer. Inflation is making people poorer. Higher interest rates, again, is making people poorer. All these things mean that the general public is not happy. And therefore, when the general election comes round, are people going to vote in the Conservatives again? I'm not too sure. I don't think so. Again, I'm not sharing my political belief or opinion, on Conservatives or Labour, whoever else, but I simply can't see the Conservatives being in power next time round. So let's come on to the second part of this video and we'll share, what do governments want? And it's so vitally important that we understand what governments are striving for because that allows us to act. And we'll come on to acting and what we can do as an investor at the end of this video. Now, if you are enjoying this video, please do consider hitting that like button. It will help get this video in front of other people and boost the channel to, again, a newer audience. So it's very, very simple. Governments want things to go well. They want the economy to go well. They want the market to be booming, right? It's very, very simple because if that is the case, most people in the UK are happy. And guess what? If most people are happy, that existing government is going to be voted into power yet again. It's as simple as that, right? So let's think about property. What does the government want? The government wants a booming property market. They don't want the current property market we've got right now, where interest rates are relatively high and things have started to slow down and price is dropping ever so slightly. The government does not want this. That doesn't make people happy. The government wants the reverse. They want house prices to be increasing and they want a very strong property market. So now we know what governments want, and that's also to some extent what we want as investors, right? You can see that somewhat marries up. Yes, sometimes we actually make our very best purchases in recessions, but generally speaking, we also want the market to go well. Everyone can win if that is the case. Okay, on to the third part on this video where we discuss what the future could look like. Now, as I've already discussed, I can't see the Conservatives still being in power by the time the next general election comes. I'm not going to go into the reasons again, but if I was betting, I just don't think it's going to happen. Now, I was at a networking event a couple of months ago, and a seasoned financial advisor who's got a multi-million-pound property portfolio, I think he's in his 60s, he was saying, right, well, in the past 30 years, property legislation and rules and regs is at its highest it's ever been. Now, that's really important to think about. We've got a Conservative government and property rules and regulations are at the highest it's ever been, at its peak, right? So here's the thing, let's assume that the Conservatives are not going to remain in power, and let's just say maybe Labour does come to power. Well, do you think Labour are going to be easier and softer on landlords or harder? Again, if I was betting, I would say Labour would be harder on landlords. So landlords, what can you expect the future to look like? Can you expect stricter rules and regulation, stricter government legislation when it comes to property and property investing? I think so. Now here's the thing, we don't have to go too far afield to see this already happening in other parts of the world, and even Europe. Take Scotland, for example. There is a cap on rents in Scotland. Again, this could come through to England, maybe if Labour was to come to power. Again, let's look at the proposed rental reforms that are currently being pushed through our current government. Actually, if you look at these reforms, they're not that bad for most single buy-to-let landlords. But if you're a HMO landlord, again, there's an increased risk for you. I'm okay with these reforms, reading through it, I'm okay. I don't necessarily think they're a bad thing. But if Labour was to, actually look at this and start from scratch, would it be a bit stricter than what it is now? Would it be a bit harsher on landlords? It could possibly be, right? And a final example, just to hammer this home, look at the proposed EPC changes that have now been scrapped. Rishi Sunak has scrapped these changes. Surely there's only a matter of time until something similar comes back into effect, right? And again, if a Labour government comes to power, I seriously wouldn't be surprised if this came back plus a little bit more. Now here's the thing, I'm not trying to paint a future where everything is really bad and legislation is really tight and it really restricts landlords, but it's a possibility that it's going to get slightly worse before it gets better. So what can we do about it? Really, really important. What can we as property investors do about this? And this is the fourth part of this video and the most important part. So listen to what I'm going to be sharing with you now. This is personally what I'm doing across my portfolio, and it's what I'm doing with my clients. Number one, whatever you're buying from this day on, no matter what property investment it is whatsoever, ensure there is a sufficient margin of safety on your cash flow. So for example, let's say you're buying a single buy-to-let, and at the moment at the current figures it cash flows, 150, 200 pounds per month, something like that. Personally for me, I would want to have a nice margin of safety if anything was to go wrong. So let's just say a new government comes to power, they impose a legislation or some restriction or something like that, and that costs us as landlords. Let's say it costs us, £500 a year to comply to this certain regulation, right? So what's 500 divided by 12? I'm going to make the maths easy and divide it by 10. I'm a pilot, I don't use specific numbers. So let's say we're looking at 50 or 60 pounds per month, extra in fees in our expenses to make this property deal happen. Well, if we're buying with an increased margin of safety on our cash flow, on our monthly profit, well, all of a sudden, if Labour or the new government or whoever it is imposes a restriction or a law against landlords that costs us to, adhere to this law, well, we can pay for it. We've got the margin of safety. So what? So anything you're buying from now on, please factor in a margin of safety. Now, again, as you've probably been watching my other videos, you've heard me bang on about this before because, again, we can use the interest rate rise story again to describe a perfect reason why you need to invest with a margin of safety on your monthly cash flow. Because if interest rates grow up, mortgage costs increase, and all of a sudden we don't want to bear that cost. If we've got a nice margin of safety, we can afford for things to go wrong. We can afford for an increased mortgage payment. We can afford for higher maintenance and things of that nature. So So now you know to buy with an increased margin of safety when it comes to cash flow. What else can you be doing? Now, second of all, it's to buy below market value. And you've heard me, again, talk about this in previous videos, but let's just illustrate how important this is. If you're buying below market value, again, you've got a buffer, you've got a margin of safety, not so much on your monthly rental profits, but actually on the purchase price of the property itself, on the value of that property. So if you're buying below market value, as soon as you complete from day one, you have equity in the property. You've got money in there that you can do something with. You can either pull a proportion of that money out via a mortgage, or again, you could sell the property at a future date and pocket that difference. So buying below market value gives us more options in life, and you always want more options when it comes to property. You don't want to be narrowed down to a single exit, and that's where investors trip up. Always have at least 2 exits in property. Maybe it's selling the property at a profit, maybe it's renting the property out at a profit. They're 2 really good exits to have, right? So this is why we should be buying below market value. And again, if some government legislation comes in and all of a sudden actually maybe we're thinking of selling the property, well, guess what? We can probably profit from selling this property. How incredible is that? Now, if you want access to below market value, genuine below market value deals, consider signing up to our email list. The link is in the description, or you can go to www.ms7.uk/email. Now, we have a property below market value in every email we send. Now, here's the funny thing. I actually received a message from one of our subscribers who said, Marco, I've been subscribed to your email. However, I noticed occasionally you miss a week. What's going on here? Well, here's the thing, Mark. And as we mentioned over the phone together, I can't guarantee a property for you every single week. That's not how this business works. They're like buses, property opportunities. You'll have nothing for a couple of weeks, and all of a sudden you'll get 3 in the very same week. So I must apologize if you're expecting an email with a property every single week. I just generally can't commit to that. And here's the thing. I don't think it's right for me to send you a deal every single week if that deal says only like a 5% discount to the market value, right? It's not worth your time. It's not worth my time. You can be assured that every single property in an email will be a significant discount to the market value. Not only that, it'll be a deal that we have vetted ourselves. So if you don't see a property in a particular week, I do apologize, but we're working really hard behind the scenes to get a really good deal presented to you. So I hope that answers the questions for maybe other subscribers who are wondering why they're not getting a property every single week. But most weeks you will have a property direct to your inbox, and this is first come, first serve. So you've got to be quick. Now, if you follow the 2 steps that I've just given you, which is firstly to buy with a margin of safety on your cash flow, so on your monthly cash flow, and you're buying below market value in terms of the purchase price, I think, in my opinion, this is a great way to invest in property, to beat whatever government is in power, and to ensure that you're actually running a profitable business, right? You've got 2 exit strategies. You can continue renting at a profit, absolutely great. Or worst comes to worst, you can sell and benefit from the equity you've locked in from day one. Do you have a question? If so, please do post it below in the comments. And as you know, I respond to all comments personally. Now, what video should you watch next? Well, here's the thing. I'm going to let YouTube decide. YouTube knows you better than I know you. So you'll see a video pop up. Consider watching it. I'd love to see you on another video, and I wish you all the very best in your property investing week. Goodbye.